Hello there, this is fairbinaryoptions.com. So let's write on the screen fairbinaryoptions.com. This is the euro US dollar in the 4-hour chart, and I would like to make a let's say sort of good analysis on the pair, as I don't think that the move that we see to the upside here is, let's say, the move that everyone expected. I mean the break higher. What we have here is a contracting triangle that broke higher on the 4-hour chart here. Let's change the color for it. Let's make it blue. And it means that, of course, that the previous wave prior to the triangular formation, and that ended with the triangular formation, and that started at this very moment of time, well, this from here and to here is only a corrective wave. I agree. However, the move that goes here to the downside is not an impulsive move at all, and therefore it can only be labeled as a corrective move as well. Now, if I would go and take a look at the move from this moment of time, so this should be labeled something like A, B, C, X, and then the contracting triangle A, B, C, D, and the E wave. Now the whole key goes with the E wave. If the E wave is done here or the E wave is done here, I would say that the E wave is done at the highs there, right here at the highs. And from that moment of time, the impulsive move starts. Now, in terms of Elliott waves, the impulsive move goes like this. From this moment, we go the first wave to the downside, and then the second wave all the way here with the complex correction, and then the third wave goes 1, 2, 3, 4, and then the 5. So this will be the third wave, the fourth wave here, and the fifth wave here. So let's make this one red. So 1, 2, 3, 4, 5. So this would be only wave A out of our possible zigzag. So let's say that this is a 5-way structure, wave A. Let's make it blue, wave A. Then we have what? We have a 3-way structure that goes in the form of a flat. That 3-way structure starts from here, and it goes A and B and C. This is a classical irregular flat, and the whole move should end. Let me make it red. The whole move, or the B wave out of the same degree, should end here. From that moment of time, we are looking for what? The B wave is not able to retrace more than 61.8 when compared with wave A, and that makes the case that this is a zigzag. Well, if this is a zigzag, we need to measure the time taken for wave A to form. This is the time taken for wave A to form. Then apply the time element on the right side, so clone this one. Apply it on the right side by the moment that the B wave started here. And therefore, we should look for a similar time for the C wave to the downside to form. Well, the similar time, I would say that the C wave, just like that, without even counting the waves, the C wave should be done with this move lower in the form of another 1, 2, 3, 4, 5. Let me show you the 1, 2, 3, 4, 5, or the impulsive move 1, 2, the third wave to the upside, probably here, and the fourth and the fifth. Let's make it red. Like this, and therefore this is a zigzag. So what do we have so far? We have an ABC to the downside. However, the market goes and makes a new move to the downside, but a move to the downside that ended with a contracting triangle that acts as a reversal pattern, and that is important as it signals that this move to the downside here, it is still a corrective move. In terms of Elliott waves as well, I would say that the move started, or the move that ended with these highs here, so 1, 2, 3, 4, and 5, would be nothing but an X wave out of this degree, or an intervening X wave. an intervening X wave out of this degree, and from this moment on we should look for another A and B and the C. However, what kind of a pattern we should have for this move to the downside? Normally, if this is a zigzag, we should look for another zigzag or for another flat. But as you can see, when you're looking at the whole pattern here to the downside, this move here, this is no A, B, C, as while this might be a five-way structure, this is no five-way structure. It means that the whole move, so the whole move that ended all the way here to the downside, is only wave A out of another flat. If this is a three-way structure, this would be, and this should be, a three-way structure to the upside. But the B wave here is mandatory to go and to retrace more than 61.8 when compared with the whole previous wave A. And then what we need to do is to take a Fibonacci retracement from the highs to the wave A here, and we see that the 61.8 actually came just this Friday. So the prerequisites or the elements for trading, let's say, a flat are there, and normally we should have now another impulsive move or a C wave this time, a C wave to go all the way to the downside and to take these lows here. So what I would do, the strategy for next week on the Euro US dollar, is to go and buy put options on the opening on Monday. I would buy put options also on the 3460 area, somewhere around here, so this to be A and this to be the B wave. And then I will buy call options on a move to 3665, as ideally the market should end still around here, so to have like this and then aggressively being bought again for a next wave. It remains to be seen, but there is the strategy for the Euro US dollar. Let's write here on the screen that buying put options with end of day expiration date at the opening on Monday, and also buying call options with end of week and above again end of week expiration date at the opening when price is reaching 1.3665 area, and mark my words, that area is going to be reached. Thank you very much. FairBinaryOptions.com. We just look at how to trade the Euro US dollar next week. Bye bye.